Hello, blockchain people. This is your host, Carlos Cano speaking, welcoming you to this very special episode of our podcast. This time, and as we will be doing now and again, we are performing the very first asset report public review. Therefore, I thought it would be good to create this little intro to add some additional context into what we'll be doing here. As some of you already know, at Decor we produce institutional-grade research reports for financial institutions that want to invest in the blockchain and cryptocurrency space. We create these reports through a team of distributed researchers worldwide that use a proprietary platform to research these projects in depth based on publicly available information. These reports are all publicly available at dcore.net, that is d-core.net, and you can access them at any time, anywhere. However, coming from the blockchain space ourselves, we feel like apart from helping attract institutional capital, there is so much more that we can do to harness the power of our community. As die-hard crypto nerds ourselves, we want the projects fueling world-changing technology to get better and grow along with the public's interest in this space. What you are about to see or listen to is me reviewing one of our reports completely live with the leading executives of one of our reviewed projects, Kira Network. The reason we're doing this is the same reason we make our reports fully available to the public. We believe that it is only through transparency and accountability that we can empower a new financial ecosystem and the Web 3.0. Last but not least, I'd like to thank Kira Network's Milana and Mateus for agreeing to join me on this pilot review. They both accepted both the praise and the criticism in our report with total grace and very openly, and agreed to do this show to get closer to everyone examining their project. Thank you again, Milana and Mateus. And without any further ado, here's the very first asset report public review on Kira Network. I sincerely hope you'll enjoy it. Milana, Matthew, welcome.
Thank you.
Thank you. Hello.
So, as you guys heard on the intro, we are doing the review for the report on Kira Exchange, on Kira Network. Kira Network is a decentralized network similar to Ethereum in that sense, developed by Kira Core. The network seeks to transition to a fully decentralized on-chain governance system with a built-in contracting system to allow the development of the network by third parties on a freelance basis using smart contracts. The network uses a new consensus mechanism called multi-bonded proof of stake, which enables staked assets to be included in the liquidity pools of the Interchange exchange protocol, IXP. The protocol is developed by Kira to facilitate the trading of tokens originating from independent blockchains without any scaling limitations. Kira also uses a new crowdfunding mechanism, which we'll be discussing in detail, and that is Ibo Crowdfunding. Using it, investors stake their tokens or assets using one or many proof-of-stake networks to interchain mine new tokens. This methodology replaces the need for users to exchange other assets to acquire new tokens. The project has a very robust set of strategic partners, including backing by several venture capital firms, and is aiming to raise an additional $400,000 on a public round at 0.025 dollars per token, and the company has also, through its venture capital backing, raised already 300 million tokens worth of their KEX tokens, which is equivalent to $3.5 million. So, since we will be looking at Kira's ratings, which got a 65 out of 100, a quite high rating for the standards of our distributed team of researchers, I'd like to start with the highest rated categories on the review. And for that, it's perfect that we have Matt here, who is the CTO, as well as Milana, who is the CEO of Kira. So to get started with technology, in that way, let's talk about multi-bonded proof of stake, and who better to explain that than you guys. What is so innovative about multi-bonded proof of stake, and what is Kira doing to make it happen?
Okay, so I don't know if Milana wants to give like broader overview, or you would want more technical overview.
Yeah,
When it comes.
I can give a like a broader overview, and we can go into the more technical overview, I guess.
Okay.
Yeah. So basically, the multi-bonded proof of stake consensus is developed by us, and it allows our network to scale the security by staking any assets, any digital assets out there. It can be real world assets that are tokenized, or it can be crypto assets, any cryptocurrency, stable coins, digital fiat, as well as NFT. So users can earn rewards from staking any of these assets. And Kira Consensus automatically issues one-to-one staking derivatives, which enables transfers and use of all the tokens at stake within and also outside of the Kira network. So basically, you utilize 100% of your liquidity when you stake those assets. You know how usually on proof of stake consensus, when you stake assets, they are locked, and you can earn rewards on them, but there's nothing much else you can do about it. So with Kira, you can stake these assets, and when you receive a staking derivative of that staked asset, you can restake it again, or you can trade it on Kira or use other decentralized applications at the same time.
Okay, good. Anything that you'd like to add to that, Mateus?
So maybe from technical point of view, right? Few technical points is that in typical, as Milana mentioned, in typical proof of stake, right? You can only stake a single asset, and security of your proof of stake network is usually limited to the value at stake vouching for honest operation of the network operators and the number of non-Sybil validators in your network, right? So to the second point, it doesn't matter if you have 100,000 million validators, right? If all those validators are run by, let's say, 3 companies, right? Or maybe in 2 data centers to begin with, right? So it's totally defeats the purpose of having such large number of operators. And of course, you have to incentivize every single one of them to exist, right? You have to pay for that. Usually that's done through block and fiat rewards. That's first point. The second point is that imagine a situation, right, where you are transferring, let's say, $1 billion worth of Bitcoin, right, from Bitcoin chain to Ethereum chain over a bridge. And but the problem is that the Ethereum token, right, has a finite value, right, and maybe there's only 100 million Ethereum worth dollars securing Ethereum 2.0, right? So then you can end up in the situation where you have $900 million in incentives, right, to steal all those Bitcoins that were just transferred to your network. So this is what multi-bonded proof of stake consensus is solving. First of all, it's simply resistant. It's decentralized. Any network, any validator can join the network as long as it's approved by the current set of the governance. This prevents civil actors from creating multiple nodes. And the second point is that there are no limitation in terms of how much value can be staked. So as your network grows, the value at stake can also grow. So you arrive to this situation where you not only scale the throughput, like all proof of stake promise you, but you can also scale the security because you're no longer limited to just a single token. You can just think about it like a step from a single collateralized DAI, right, where you were only collateralizing creation of DAI tokens with Ethereum. And then the maker DAO came up with the idea to, maybe you can multi-collateralize, right? Maybe you can use multiple assets to keep the price more stable, right? So this is the same concept. It's just applied to the security. So you have the best of proof of stake which is ability to scale the throughput, and you have best of proof of work, right? Where you have the ability to scale the security.
Okay, that's very interesting. And since we are seeing here that, and as we were saying, technology is the best rated category that you guys performed in. And that is in particular because our researchers were very attracted to the fact that you were raising three very valid new ideas. And the first one of that being multi-bonded proof of stake, and the second one of that being IVO crowdfunding. And you're effectively creating a new method for people to raise funds and to try to replace the ICO and the other models that have yet not been so successful as I think everyone wished they would. So what is so good about IVO crowdfunding in your words? What is it, and how would that revolutionize the ways people are raising funds right now?
Basically, with IVO crowdfunding, this is a place where investors use their existing assets at stake on proof of stake networks in order to interchain mine new tokens instead of liquidating their valuable assets to acquire them, being very highly speculative tokens. So how does it work is that investors delegate their tokens to the validators, which are going to be projects trying to raise money. So these validators are charging commissions for all block rewards. And instead of receiving the same token they staked, investors receive the new minted token of the project they're trying to invest by delegating. So, the new asset is being interchain mined and is being pegged to the value of their own token, so that for each 1 cent earned by the IVO validator, aka project, the investor receives equivalent of 1 cent in this new token. So the IVO model enables investors to maintain full custody over their existing funds while interchain mining new assets. And also, if by any reason investors decide that the project is not performing to their standards, they can undelegate these assets, and these assets will still remain in their custody, and they can keep all the tokens that they earned. So basically, the projects, of course, to deliver on their promises because they don't want the investors to redelegate. In other words, new projects can fundraise their operations without being able to, exit scam with the investors' funds, which we've seen happen a lot in the legacy ICOs back in the day.
Right. Right.
So it kind of satisfies both parties, the projects that are trying to fund their operations through this new crowdfunding mechanism, and also investors who are trying to acquire new tokens without risking their own capital.
Right. And for anyone that's listening that might not know why those IVO crowdfunding stand for, the initials?
They stand for Initial Validator Offering.
Perfect. So when you have IVO crowdfunding, you're also introducing the other concept that's key to your project, and that is interchange exchange protocol.
Mm-hmm.
Yeah. So how does that translate into, how does that work together with IVO and multi-bonded proof of stake, and what is IXP?
So maybe I will mention how does the IVO work with multi-bonded proof of stake, right? Because in typical proof of stake, as we mentioned earlier, you can stake only 1 token. So right now it's possible already to deploy IVOs, maybe not on chain yet, but you can imagine a system where you run a validator for someone on an existing network and you charge 100% commission on this operation, and you give to the delegators a new token instead of the token that you are earning, right? So in case of multi-bonded proof of stake, this is brought way farther because investors can stake any asset. So then they can stake fiat, they can stake NFTs, they can stake virtually any type of token that is within the Interchain ecosystem. So this is how multi-bonded proof of stake brings the IVO step further, and how multi-bond proof of stake also changes, like keeps the system secure despite the assets being deposited to the network. Those are two most important aspects. Another most important aspect is that first we were talking about the MBPOS and the IPO. And second, we will talk about the MBPO, about the IPOs and how do they work with the exchange protocol. So one of
Wait,
the
before we
first
go into the
applications
IVOs and how
that,
do they work with the exchange protocol, I think I should mention how the exchange protocol will work, by itself, and like what are we
okay, makes sense.
with here. Yeah,
Perfect,
so
yeah.
why are we building the XMP? It's going to be the very first decentralized application on Kira Network to demonstrate how Kira Network can be used for hosting decentralized finance applications, because Kira Network is going to be a infrastructure ecosystem where other decentralized applications will be hosted and deployed in order to generate network activity using liquid assets. So users can stake and trade directly on Interchain Exchange Protocol. So how it will work is that it's a sharded blockchain applications where individuals sets of order books are being executed in parallel between different dedicated trading zones, parallel chains. So we will have the main relay chain, which is a Kira hub, where users can deposit and stake their assets. And all of the assets that are deposited and staked will become tradable on these designated trading zones, which are parallel chains. So IXP will also be accessible over the IBC protocol. So meaning other projects will be able to use it in their application stack. So it's not going to be just on your network. Other projects can adapt it as well. And XMP will also demonstrate how blockchain's applications can be legally compliant. Why is because the validators will have an option to choose whether or not they want to execute a certain application, such as those facilitating trading on XMP. So then they can stay legally compliant within their own jurisdiction. So basically, we'll do that through DID of validators of specific trading zones. For example, if we'll have a STO trading zone on it, then we'll have the ability to accept transactions originating only from the KYC account without the need for users to reveal their identity, because it will be done through decentralized identity. So, just to give an example, like unlike Ethereum 2.0, where all the validators are forced to execute any type of logic that is basically deployed on chain, regardless of what their jurisdiction is. So that's going to be a completely different, with the IXP.
And to add to that, final kind of word, right? How does it work with IPOs? Is that, of course, once you mine a new token, this new token can instantly be traded on the XP. So here's the connection between MBPOS, IPO, and the IXP.
Okay, perfect. So, well, those are the three more innovative concepts that Kira is introducing to the market, and these are pretty much your three pillars, right? This is what your projects stand on. And I think one idea that always comes with, or at least one question that always comes to my mind, and I saw this on the researchers as well when they were performing for this project, it's that they were quite innovative. Yeah, I would really like to understand where do they come from, how these ideas come to be, where did you guys get this from, and how do you think this can translate into the world, if you see a need for them in the current market or in the current ecosystem?
Well, basically, we started with the idea of a sharded order books a couple of years ago, when Matt and me, we were both in the Interchain ecosystem for a few years before we started working on Kira. So we shared a vision that there's not going to be a single master chain network that scales infinitely and provides all the features you might imagine. it's more rational to think that in the long term we'll see hundreds of projects interconnecting together, just like right now we see hundreds, thousands of smaller companies over the internet offering some kind of a service, rather than having a single website like Amazon offering all in one spot. Where if Amazon crashes, then all of the service crashes as well, and that kind of dependability on Web 2, it's not very secure or efficient. So now, like, we see the transition into the Web 3, where basically people will be hosting those services. So another point is that we wanted to utilize 100% of working capital that people will have at their exposure, with minimum possible risks involved, and without the fear of liquidations. So, we wanted to connect Kira and the real world economies, not just, by securing a network with crypto tokens, but also securing our network with real world assets, such as digitalized real estate, for example. So, and finally, like the third pillar that we've talked about, the IVO, is that we've been, at least like I've been in the space since the early 2017. Matt is even earlier, so we've seen how projects were raising money in those days, and how investors were exposing themselves to a lot of risk. And then the bear market happened, and then we've seen how it was extremely hard for projects to raise capital to fund their operations. So we decided that MBPOS consensus, in the combination of this problem, will be an interesting idea to create an IVO to help solve problems for these two parties.
I see also that you that you're strongly betting on people not wanting to fork the protocol, given the sheer size of the amount of staked assets, right? And in this, like Matt commented before, it's always good to have a bigger share being staked to disincentivize people from trying to attack with fewer assets in order to gain more of them. And what we see here as well, and this is going more into the market and project specifics, is that you also have a concept that has, of course, with new ideas, there's always risk, right? There's always a risk that the market can reject what you're proposing, that it decides to go either rationally or irrationally on a different direction. So how do you see the process of turning the market into adopting this kind of new ideas, especially when there's so many of them and all at the same time?
Okay, so maybe I will talk about the how does the governance work, and how does that work in combination with the positive feedback loop, which is built into the consensus itself. So how does the economy work to kind of bootstrap itself is that first first governance of the network defines interest rates for staking. By doing so, this attracts people to come into the platform and stake their assets to receive the ROI, right? To yield the APY. As they come to the network, all their assets that they stake to yield, they remain liquid. And while they remain liquid through the concept of staking derivatives, which I'm not sure if we mentioned already, all those tokens that are staked remain tradable, remain usable within the network. And that's what gives your network ability to move. This is what scales your ability to. This is what scales the network in terms of throughput. This is what scales the network in terms of number of transactions being processed. Because if your capital is liquid, you can interact with DeFi application, you can interact with exchange application, XP. And as a result, you are generating more network fees that you can then share with people that staked assets. It means you have more capital to attract even more people to the system. And this is what creates a positive feedback loop where people stake, this increases network activity, which increases fee revenues, which then attracts even more people to come into the platform. And this is steered by the governance system, which has ability to define the interest rates and inflation, and decides what's the inflation of the token, whether the fiat token is inflationary or is disinflationary. So initially, network will bootstrap itself, right? Maybe by using inflationary process. And later on, once the fee rewards are enough to sustain the network, it might turn into what Bitcoin is, right? Into disinflationary assets. So what Kira does is, governance does, it simply observes, okay, which tokens out there in the ecosystem are most viral and why do we need them in the network? And there might be two reasons. One reason might be that we need them to increase the security because they are valuable, right? And the second reason might be to increase the network activity, because if we allow those tokens to be staked, then the users, holders of those tokens, are using them to trade, using them to interact with different DeFi applications than deployed on the Kira network. And so, as I mentioned, the governance simply observes what's the most viral, defines interest rates to attract people that stake those assets, hold those assets, and that's how they make the economy work. And it's a very kind of typical way how the modern economies works, right? How does the US economy work? Let's say there is a crisis. What does the US do? They decrease interest rates. What does it mean? People can borrow more cheaper, right? They can hire people, they can do many things, right? With this new capital that they can now borrow for nothing, right? And this is the same concept. It's just brought on chain and it's being used with many different tokens, but it's open, it's public, it's clear and transparent. So you really see what's going on in the system. And you don't have someone, artificially printing tokens, right? Printing dollars.
Yeah, so just to add on that, basically incentivizing people, to make more rewards is always very, very effective, especially if you do it in a very secure manner. So, just to make a point on your question, how we're planning to make sure that the market, even if it's irrational, will adapt these ideas.
Is there a follow up to that? Okay, yeah. I thought you froze there for a second. Okay, sorry.
I
And sorry, you're very you're very static. In this way, I think there are also two things that that are very important here. One of them is the quality of your partners. I think what we found is that you have very good partners that you're allied with in order to make the project happen. And in another way, it doesn't have to be a less positive thing. We know that the crypto ecosystem it's not a zero-sum game. People are not taking value from others, but creating value together. But in this way, especially in the derivatives market, you have quite strong competition, or there are quite strong players that are also playing in this regard. And as we see here on the screen, your closest direct competitor, that would be Staffy, as we believe. But you also have Aave and Synthetics doing similar things, and in a less direct way, WBTC. So yeah, what can you tell us about both your partners and the environment that you're going to be playing in with this competition?
Regarding the partners that we currently have, either are wallets, explorers, DAOs, or asset issuers. So that's basically the ideal partners for us that will all, benefit us as well as we benefiting them. Regardless, all the other projects that are trying to get the market access of all the other assets that we'll have, we will actually be creating a cross-chain ecosystem alliance where we're going to lead it and create a Ethereum bridge for all these other projects to connect with us instead of, us partnering with each of them separately. So that's going to be a thing in the next, couple of months, along with our testnet and mainnet. And regarding our competition and like how we position ourselves, basically there are a few things. So Kira exists as part of both wider crypto ecosystem projects similar to the Cosmos and Polkadot that allows users to host and secure decentralized applications, like I've mentioned before. And it also exists within the staking ecosystem, similar to Stafi and Realm DeFi that allows users to take existing crypto assets and generate passive income with minimal risk. And how are we different from both of these narratives is, unlike Polkadot and Cosmos, Kira scales not only the throughput of decentralized applications, but also we are able to continuously scale our security with growing TVL. And in addition to security, Kira creates a positive feedback loop that Matt mentioned before at the core of our own consensus. So with the growing number of assets deposited and staked, the activity of our network increases alongside generated rewards for the stakeholders. And this in turn provides even more incentives to stake assets in the cycle, just repeats itself. And Kira uses the utilitarian principles of operations in the governance and not plutocratic like Polka and Cosmos. So meaning it is impossible to exploit the network by stealing, hoarding, or centralizing tokens with the hands of custodians. So now, to address your question, unlike Stafi and RAM DeFi, for example, Kira enables liquid staking to happen directly on our own network to increase the security and the network activity of our own blockchain applications. And basically, as a result, Kira allows not only to stake any asset, including non-fungible tokens as well, but it also supports leverage staking. So meaning that tokens can be staked on many networks at the same time. And, lastly, like, aside from how Stafi and RAM DeFi and other liquid staking do their business model, Kira does not charge users for staking, and we don't stake for them, basically, meaning that Kira users will always hold full custody and control over their own assets, unlike Stafi and RAM DeFi and other projects like that.
Yeah, no, in short, right? Like the stuff he stakes for you and charges you for that, and that's all. Right? And it only works with the proof of stake networks, right? Only for specific tokens, right? And this is totally different business model, and this is totally something else. What Kira does, like liquid staking, Kira, it's part of the consensus. It's part of the ensuring security and that increase of network activity. It's used for very specific purpose. It's not done for a sake of something lacking on some other network. Right. You can do liquid staking on any network and just copy their smart contract and replace their fee with 0 fee, and that's all, right? Like that's what you can do with stuff here. Like you don't really need it, right? Like all those implementations should be native to each network. Every network, every proof of stake network should natively support staking derivatives on their own, right? No one needs to do that on top as separate project and charge people for that. And if your network supports staking derivatives natively, then, as we mentioned with Kira, you can do staking on leverage, meaning you can stake already staked token. Of course, as long as sum of slashing is below 100%, and network agrees to allow such asset to be staked, it can be done. Which is that's the whole point of that. So it's I think that people very often mistake Kira like to do something similar to Stafi, which is completely different.
Okay, and before we move on to the next section, would you guys like to do another word on your partnerships, since there are a bunch of them, and particularly exciting about the Polkadot and Cosmos integrations?
We have few partnerships coming out that will be, beneficial for our ecosystem, also beneficial for the partners. Um, and in the future, after the public testnet is done, we will start pushing out our NFT narrative because on Kira you can also stake NFTs, and these NFT projects can have a marketplace where the users can actually make revenue from staking these assets instead of just having them um, like not being utilized currently. So in the future we'll have NFT partnerships as well. Um, but yeah, basically, as of right now, as I mentioned, the ideal partners for us and the partners that we have partnered with in the past are wallets, explorers, asset issuance, and DAOs.
Okay, and since moving forward, since this investment report is very much geared towards helping capital institutions making a decision about whether or not to invest in a company, we have to talk about the token raise. And you guys already did a great job raising capital. You raised 3.6 million from venture capital. So you, let's say 90% of your funding has already been done on private rounds. You're only looking for the remaining 10% to come from the public. And
We actually have a public round already.
okay, can you, could you elaborate for the public?
Yeah, so we had a public round. I think it was yeah, on at the end of November.
25th.
Yeah, 2021st. It was done through liquidity auction that we ourselves created. The contract was created by Kira. And then basically a couple of days later, we got listed on Uniswap and been trading there ever since. And this month, we're planning to, um, get listed on the primary centralized exchange as a partner.
All right, perfect. So in this regard, I think this section might be a bit outdated.
It did.
Yeah, yeah, it is a bit outdated. Then, so how much did you guys manage to raise in this fund on this race?
I think that was 2,500 Ether. If you go to auction.kira.network, you can see the statistics.
Okay, perfect. So in this section, we will add a screenshot from that, so just so people get the full picture. And sorry about that, yeah, about that lack of information. In here, we're seeing the intended funds allocation, and I think in this regard, what we saw with your ratings and what the researchers pointed out when they were doing the rating for your tokenomics is that there was a lack of information regarding what you were planning to use the funds for, and that kind of hurt your rating, which is something that we can correct right now if you want to elaborate a bit on how you are using the funds. And just another comment, since we're seeing here on the screen what the funds allocation would be, and if we go a bit below, we can see that that your funds will the vesting periods for the funds, right? So the developers and team funds will be vested over 24 months. The advisor funds will be vested over 36 months. The foundation funds will be vested perpetually and diluted over time. The reserve and liquidity funds vested over 16 months. And I think we found this really positive because we all like to see these vesting periods to ensure that that founders and that everyone on the team has an incentive to continue to bring in on their best of their abilities to the project. And yeah, what can you tell us about the use of the funds then?
Yeah, I mean, the use of the funds are, pretty generic, to be honest, to every crypto project. So majority of the funds will be allocated to development because, we are building a pretty complex, exotic ecosystem. And in order to find the right talent that has the ability, skills, knowledge, to build something like this, it's extremely, extremely specific people. And then, there's not many of them, you know, in the world. So yeah, so majority of funds will be allocated to development, and then the second category, the funds will go into marketing and legal, of course, into the market making, and etc. So the other liquidity tokens that we have will also go into supporting the price of the token over a long-term period of time. And then the community tokens are basically, you know, are tokens that we pay to our ambassadors that we currently have.
And we also distribute those tokens through the liquidity program, which we have currently ongoing. If you go to stake.kira.network, you can currently stake KEX if you already have it. With APY right now is, I think, around or even above 300% a year.
Yeah.
And
So we distribute those tokens more like to the current holders, right? If you hold long term the token, you're getting access to this bigger chunk of capital. And if you exit your position, you obviously do not. So that was the idea behind that sort of distribution.
Yeah, regarding the token, you are planning to transition, right? When you're on testnet and on mainnet, I understand that this is planning to change. So how is your progress coming along with your roadmap as planned, and with 2020 being such a special year?
Yeah, I mean, to be honest, with 2020 being such a special year, despite like coronavirus situation, it's been pretty great year for us, and we focused on building the ecosystem and focused on development, and everything is going right on time. We'll have the testnet phase 1 ready this month, so stay tuned for the updates. And then soon after the testnet phase 1 testing is done, after a couple of weeks, we'll do the testnet phase 2. We'll test that for about a month, and we'll have the mainnet phase 1 out at that time. We are planning to release the mainnet in various phases. It's going to be similar to the Polkadot. So basically, with the mainnet phase 1, we'll have just the general proof of authority consensus and the governance to showcase how it works, and then we'll scale up from there on.
Okay, perfect. So having cleared the question with the lack of information about the use of funds, I think it's fair that before going into team and legal, we just make a quick stop on social media and virality, which is quite a controversial category. Like, many people don't think marketing and social media should have a weight or that much of a prominent weight on the rating of their projects. But particularly when you're raising funds, I think, or we think, it's pretty important that you have those aligned in order to successfully manage to do so. So how was the process of raising funds for you guys? How did you market the project? What was successful for you in order to raise funds? And on another way, what are you planning to do in order to establish yourself in the crypto community that is largely an online community that you have to be permanently active on?
Sure. It's been a very, very busy time for us since June, actually raising awareness. So, we raised seed and majority of the private relatively quickly through just, connections and people talking about Kira. And then we started our global AMA tour. So basically we've done like 60 AMAs. So yeah, like that's a lot to cover within a couple of months. And then we've done some PR articles within traditional blockchain um, publications and non-blockchain publications, and we cooperated with couple of influencers who also invested in us and been supporting our project since that time. So right now we have like a lot of international Kira groups on Telegram. I think we have over 15,000 people or more in the group. So we have the ambassador program. The ambassadors are in charge of their own local groups of Kira. We also had a huge marketing and community awareness in China and Vietnam in the last couple of months. We've done a lot of AMAs there. We have our WeChat groups. On WeChat you can only have 500 people per group, so we have a lot of groups where we also do, local AMAs. We've done a lot of PR in China. We pushed the in-depth articles with Win Crypto Daily, and we're going to have one with Block Beats soon as well. So yeah, like there's definitely been a lot of that. Maybe not your regular crypto show marketing, but we've tried to keep things a bit more organic and like educate people on what we're building. And yeah, like it's a complex project, and furthermore we will have more educational content coming out, making sure that the community stays active. We're always talking to the community in various groups, answering their questions and their concerns as well. And we will push more, marketing awareness in terms of more PR across the Western side of things, and as well as the Asia. And then after the testnet is done, we'll do another round of we're not going to do 60 AMAs again, but we'll do a round of AMAs that we find important in order to tell people how the testnet worked and what's waiting for them in the next in the upcoming future with the mainnet coming out and so on. So that's basically the plan.
When you talk about AMAs, where have you guys been focused mostly for these AMAs?
Like we've done all of the AMAs that are possible. We focused on the AMAs that are in Turkey, AMAs that are covered the Europe, and a lot of Vietnamese, a lot of Chinese, some Indian.
Which platform? Which platform is this? Sorry?
Which AMAs that we've done?
No, which platform? I mean, over Reddit, over Telegram, over.
Oh no, yeah, it's over Telegram and over WeChat.
Okay, correct. Okay, very good. So moving into the categories, the final categories, and these are the ones that your project performed the lowest on. That would be team. And with team, I'm skipping a bit. Your performance on team is not particularly bad, as you can see here. But we find I think in there we had an overlap where the lack of members that are devoted to legal issues in your team ended up hurting both your legal rating and your team rating. So it would be good to understand what's going on in Kira right now in terms of the legal team, and as well to just go quickly over the legal risks that were identified. And as such would be and this is a permanent thing that it's intrinsic to the industry right now, the possibility that tokens are eventually considered securities. We know this is not something that it falls in your hand, but that's an industry thing. You have a quite it's something that is not perfectly clear, because it looks like you might be incorporated in Georgia, but I don't know what's the status on the incorporation. Sorry?
Let's clear this up then.
Okay.
So basically, our development, software development company, which is contributing to the Kira network development, so we call it Kira Core, it's incorporated in Georgia, Tbilisi. So it's just responsible for development. And then the token issuance company, the foundation, is incorporated in Singapore. So that is responsible for the tokens and all the network activity. And we do, obviously we have a lawyer. It's not like a legal advisor. We just have a lawyer that we have, on pay. We just finished our legal opinion stating we're not a security. legal opinion in the standards of Singapore. So yeah, I think there's nothing to worry about on that regard.
Obviously, in every jurisdiction, right, you need separate legal opinion, right? But if
Yeah.
you have in one of the major ones, which is Singapore, right, you are not a security, you're not a security. Token economics, right? It's also very clear. Like it's the governance that decides what type of asset the Kira token is, and by doing so, like we as a Kira Foundation, we as a Kira software development company, Kira Core, like we are not influencing that in any way. Right? We cannot make this token an inflationary asset or disinflationary asset, nor even profit-bearing asset. It's a governance of the network that decides, okay, those are the interest rates, or maybe there are different interest rates for different tokens, or maybe the token is disinflationary, maybe token is inflationary. It's up to the governance to decide what is the economy of the token. Like we give it in the full hands of the community to decide all that.
Okay, so basically, to summarize your answers to the legal risks that are posed, your lawyers are on retainer and on the separate jurisdictions of Singapore and Georgia. And yeah, since this is mostly geared towards institutions and towards capital firms, it's important to note that no one can particularly rank too high on legally, and this is for the public as well, since there is a lot of uncertainty in the market right now. So it would be good to get your opinions on where do you think these regulations are going right now, or if you have any word on where you hope they will go.
Yes, of course, like the regulations you will see, right? But it's not the protocol that you can regulate, it's people who operate it. As Milana mentioned before, like the people responsible for producing blocks, people responsible for accepting transactions into the blocks, those are the people whose new regulations will be touching, right? And you have to design your protocol so that those people that operate your network can stay legal compliant. And we are building that up on multiple levels, on levels that you cannot have with any other proof of stake network. Whereas Milana mentioned before, like everything has to be executed without you having ability as a network operator to say, okay, I maybe want to operate this app, or maybe I do not want to operate that app because it's not legal compliant in my jurisdiction, because it's an exchange app, and maybe this is some profit building app, or maybe there is something totally different. So this is how Kira solves it, is that you have the separation between execution layer and a settlement layer. And settlement layer is where there's a layer of the network which secures the network. This is the layer where every operator can operate without having to worry about legal compliance. And that layer we call a relay chain, like in Polkadot or a hub, like in Cosmos terminology. Right? So on this layer, like anyone can stake, anyone can be a validator without any consequences. However, when you come to executing all the blockchain applications like Exchange Protocol or some other applications, this is sharded. And the validators have a say whether or not they want to be part of executing that particular logic. So what we do is we give validators ability to, first of all, decide whether or not they want to run the application because it's legal in their jurisdiction or it's not legal in their jurisdiction. And number two, we give them ability to decide which type of transactions are being accepted into the blocks based on digital identity, which is provided by third parties. Right? So let's say if you are transacting an STO token on STO trading zone, the validator, when you submit the transaction to the blockchain, would observe, right? Would check with the ID issuer, okay, if this address is within a jurisdiction that it's legal for him to access. And if it's not, then you will have to wait longer until there is a validator in which jurisdiction it's legal to create such block, it's legal to append such transaction to the ledger. So we are first, I think, very first project that actually tries to address this and actually separated the execution from a security layer. And this way we can stay legal compliant, and we plan it from very early beginnings of the network existence.
Okay, that's a very interesting point you raised, because I think in the beginning of course, everything decentralized, starting with Bitcoin, in the beginning, it was very hard to stay legally compliant because there were no regulations whatsoever. And I think as things progress, you guys are being more and more able to build these kind of legal solutions into your products so you can come up with innovative ways to stay compliant, right? Um, and anything else you'd like to add about the legal risks, or about legal and compliance, about KYC, before we move on to talking about the team?
I don't have anything to add.
Okay,
I
perfect.
think that
Perfect. So let's just finish then with the review of your team. I think we found a team that grew quite fast. We have made a previous review of Kira, and I think we did it at a really early stage, which motivated us to review the project again in order to learn more about it with more complete information. And as you see, with the speed that things move, like that information gets outdated pretty fast. Uh,
Yeah.
in here we have the let's call it the senior team. I think we're yeah, okay, and in the ways you chose to represent yourselves, and we have to talk about the skills in the team, because I think we found a very wide array of skills, particularly when it comes to the technical and the business side. I think you guys have that pretty much covered up. As you mentioned, there are no team members strictly devoted to legal issues within your team, but you have that as a separate firm that you're contracting for this. In here, we see the development and technical team, and your advisors. And when we are scanning the projects, and we
This
are
is also outdated. The advisors are, yeah, like it's been, this is like a very old advisory page. So if you can go on our website right now, Kira.network, and scroll to advisors, you'll see our updated advisor list there.
okay.
Actually, one of our advisors became our COO. So
Okay, so let's, if you want to clarify that right now, which advisor became the COO?
yeah, so Yuri Popadian became the COO. Like if you actually scroll up at your report, you can see him there as well. So he's part of the, yeah, see, part of the team, part of the
Okay,
executive.
okay, correct. So, so Yuri is now become the COO, and we had a bit before. I mean, I will have asked. We can add a screenshot of the of your website here, just to show the updated information. I don't have
Yeah.
to go look for it right now, just to not cut the flow. But people would be seeing it here now as they see the final video. I wanted to ask you, because when we're scanning the projects and when we're looking for information, and that's all,
Mhm.
again, all public information that you can see in the report. We found a small controversy with Jorge here, and
Mhm.
that's regarding his involvement with Patron. So, is there anything that you'd like to talk about on that subject?
I don't know his involvement in Petron. Basically, he's our security advisor um, that makes sure that we've had our contracts audited. We also created together the the possible security challenge that we'll have going on continuously after the testnet and mainnet are out. Basically, rewarding anyone who can find any bugs and things like that. Yeah, so that's pretty much how he's been involved with the projects from a security point of view.
like having white hackers on top of your project is like one of the most important parts, which not many people do, right? Like if you don't have someone like constantly trying to break something, like then it's the users that will find it out, right?
Right, and if you don't have, because I understand that you guys have a bug bounty right now, right?
We've had a bug bounty actually before the public. It wasn't a bug bounty. It was more of a security challenge. We had it twice for people, for the community members who wanted to participate in the public sale for the lowest price. So we've completed those two challenges. they were pretty difficult. Most people failed. A couple of people won. So yeah, that was interesting. Educating people to make sure they don't get wrecked and they stay due diligent. And then after the test net is done, we'll start the ongoing bug challenge.
Right. And as Matthews mentioned, if we don't have people constantly trying to break things, and if we don't have the companies try to learn about the places where they can be broken, then yeah, you find out in the worst in the worst of time and in the worst of ways.
Yeah, it happens all the time. Like people get hacked in like the most ridiculous ways, and yeah, like the contracts are getting hacked, and yeah, like sometimes there's nothing you can do, but sometimes there's a lot you can do, and a lot of it is a human error and negligence. And so we're always trying to stay as secure as possible. It's extremely important.
And yes, this finishes our review of the report that we've created for you guys. So are there any final thoughts that you would like to leave our audience with? Are there any final comments that you'd like to make, or anything you'd like the audience to do if they're interested in Kira and they like what they heard about you?
Yeah, well, first of all, I wanted to say thank you to all the researchers for this amazing report. Yeah, I know that it's not an extremely easy concept to grasp, and there's a lot going on, and you have to make sure that everything ties together in the way that makes total sense. So yeah, like it was really impressive to learn that this report was creative. So thank you again, and thank you, Carlos, for hosting the interview. And for people who want to learn more about Kira, you can follow us on our Twitter. Or in our Telegram group, we have an announcement channel there as well, where we post our latest announcements. So if you want to stay up to date, you can join those groups. If you want to add anything.
I saw that Matt unmuted himself, so I just wanted to give him a second to speak.
Yeah, like sure, like it's very easy to find us and very easy to kind of stay secure. If you want to find out what's the contract address of the Kira token, it's token.kira.network. If you want to find out about metrics.kira.network. If you want to join a Telegram channel, it's Telegram or tg.kira.network. Announcements are available at ann.kira.network. So we are trying to try to stay safe.
Okay, perfect.
And don't trust random links.
Okay, perfect. As Milana mentioned, Kex is already trading on Uniswap. So if you want to give that a check, you can do so. Guys, thank you very much for your time. And thanks for everyone that is listening. If you'd like to follow us and subscribe to the channel, you can of course do so. We're putting out more content and more interviews all the time. You can already also become a researcher if you'd like to become part of the distributed team that is producing these kind of reports, looking at companies, trying to feed the crypto ecosystem with good, valuable information. All the reports are publicly available now on our website, d/core.net, dcore.net. So yeah, make sure to check it out. And guys, thanks a lot again for your time.
Thank you so much.
If at another opportunity you'd like to come on the show to talk about news about Kira, about your development, to share anything excited, we'd be more than happy to have you.
Perfect. Sounds great. Thank you again.
Thank you all. Thank you. Bye-bye.
Bye-bye.
Bye.